Hey, welcome back to Income Trading 101. Today, I'm doing the video I promised a few days ago. It's going to be a combination of Binance, Cardano, and Doge, which are the number 4, number 5, and number 6 cryptocurrencies with the highest market cap, according to Coin Market Cap. It's funny. It's like BCD, Binance, Cardano, Doge, like ABC. Anyway, let's go ahead and get into this so I don't completely run you guys off this morning. Today is June the 10th, and I'm creating this video in the morning in Central Time, about 6 a.m. or so. But let's take a look at Binance. And this is the BNB governance coin. So just taking a look, this is obviously the daily. I'll keep with the usual plan of using moving averages, MACD, and whatnot. But the Fibonacci retracement is, I can already tell, is going to help us in all three of these because each of them have similar price movements, price patterns, which is not unusual. Whenever you look at the patterns of or the charts of other assets that are in the same industry, oftentimes, even though the actual price will be different, the movement of the maybe, for the last one, I'll overlay all three and you'll see how very similar they are. Just to start off, we have convergence of the three moving averages. So you've got the 60, this yellow line up here is well, basically what's got it converging. You've got the 10 has moved above the 20 day, but not above the 60 day. So let's take a look at the hourly and get a sense if there's anything there that is going to be a little more enlightening for us. I'm going to have to expand it. It's funny. It's done the exact same thing in the hourly, just flipped. You've got the 20 above the 10. It was flipped at the 1 day, but then the 60 is down below. So you still have the 10 between the 20 and the 60, 60 day or 60 period, actually, in this scenario, a moving average. So inconclusive for the daily and for the hour. Let's look at the 30-minute. On the 30-minute, you literally have the same thing where the 10 period, if you can look at it numerically up in the upper left-hand corner of the video here, you have a scenario where the 10 period is between the 60 and the 20. I've never seen this on multiple time frames. Normally, you get one of the time frames corrects this. Then in the 15, well, how about that? Once again, on the 15-minute, the 10 period has moved above the 20, but it's still below the 60. I've never seen that. So that to me does tell me that tides are changing. But that means that this moving averages as a trading signal or hint are somewhat irrelevant right now because we're not getting a clear view of what's going on. So let's go back to the daily, and we're gonna look at the MACD. I'm glad I'm recording this because I would not have believed it. It's so unusual to have that happen across 5 different time frames, not 4. Okay, so on the MACD, we got a clear sell signal. It's crossover back on May 7th, and then obviously that captured it crossed both the MACD and the signal line crossed the zero line by May 21st, which was obviously a rather pivotal day in crypto. So we do have a bullish crossover that occurred on June the 1st, but it is yet to cross the zero line. So this means it could flatten out. It may not have the power to go ahead, the juice rather, to go ahead and cross zero. So I don't use that as a trading signal at all. Let's look at the 1 hour. So in the 1 hour, we actually most recently, just so you guys can see, I'll stretch that out a little. We most recently had a bearish crossover. You had a bullish one back on June the 8th, a couple days ago, and it went ahead and crossed over the 0 line, confirming the bullish signal, but it's already given a bearish signal as of yesterday, really late last night, June the 9th. It looks like the MACD, the blue line, is flattening out. It has not crossed the 0 line, which for me would be less reason to go ahead and sell this. I like seeing the confirmation of the MACD and the signal line crossing the 0 line. Let's go to the 30-minute. So in 30-minute, we had a really a strong bullish crossover back on June the 8th, kind of tarried a bit and ended up barely crossing the 0 line before pulling below, crossing again. So it's kind of remained somewhat bullish until, you've got these crossovers happening here. The one that happened yesterday afternoon on June the 9th. And then later in the evening, this did end up crossing the 0 line, but I'm not convinced it's going to stay down there. And given how close it is to 0 and this little bit of a crossover, I would definitely lean towards calling this more inconclusive than anything else. So we're just not getting clear signals on anything. So hopefully we'll be able to get some clear levels. Here we go. The 15-minute level. Now, it's hard to use the MACD trading at the 15-minute because you can get, all these crossovers will definitely get you sort of caught up. So you did have a bearish crossover yesterday afternoon. Bullish, bearish, but it crossed the 0 line. So, had you actually put this on for a trade, you probably would have made a few dollars in this, but nothing significant. But this is a pretty nice little bullish crossover here. And remember, these indicators are somewhat lagging. So one strong green bar right now would set this, set this thing straight and really kind of push it. But you can see kind of the full range of where prices have been, and it's still let's see, from we'll say June the 8th at what would that be, 9 p.m. Central Time, we had roughly 335 going, and then by June the 9th, so 24 hours later, at 21, we had 68. That's 10% in a day. So from 335 to 368, it's $33. So not bad. You're still getting a lot of volatility. That's why I have to stretch these out sometimes, because sometimes these charts, if they're really flat, it's hard for you to realize what's actually happening and how significant these moves are. So anyway, still worth keeping an eye on this. We could get one more green bar might pull this signal line down here, this red line, into positive territory, which would make this a better or more clear trading signal. Let's go out and look at some levels. We're going to use Fibonacci retracement, and I'm not, I could go all the way back. You've got all this data. Maybe I should go back, but we can still, let's see. I've pulled out to the daily. We'll just trying to get a better sense of where would be a good place to start. I'm just going to go from the start of 2021 as the beginning of this move. So from 2021 to where we are now, to the top of that range back in May, all the way over to where we are now, just to get a good sense. So look at that. 50% retracement, $365. Right now, you can see in red where we are, $368. So we're $3 above the 50% retracement. We actually went below the 61.8%. And what's interesting here is that 61.8% also matches the bit of resistance that we saw for a few days back in March. So let's see if there's anything else really interesting here before I move on. But yeah, this 50% retracement level, we're sitting right on top of it. It's kind of funny. I'm just going to write that down. And I don't know if you guys write these levels down when you're watching your videos or when you're doing your making trades, but you definitely want to remember, especially if you're trading, multiple assets, it's easy to forget the analysis you just did, or maybe it's just me. I'll forget the analysis I just did, and so it's important for me to go back and write down the levels just so that I can, keep them on my mind and be aware of them in trading, and whether or not we end up bouncing off of this or not. So for Binance, that 50% retracement is $365.76, which is just a few dollars away from where we are right now. So let's go ahead and get rid of this Fibonacci on this as well, and just look. Never hurts to just draw out your own and this is the other thing. You can see I wanted to make this line higher. There you go. I can see it now. TradingView helps me keep myself honest by helping me to hold these lines flat. So you can see this level here, 295, played resistance, turned around and played support. It's less relevant with today's price, but I do like, as you guys know, I like seeing these, higher highs and higher lows. This, if I were wanting to find a little bit of hope, to me, there's hope there. Let's expand that out, right? You have an upward trending channel, and I'm well aware too that this period over here, just draw it out. That was kind of support for a little bit, but I would love to see Binance move back up to coincide with this. So the top of this channel right now is looking around 470, about $470, a full $100 higher than where we are. Doesn't mean we're going to get there, but it's certainly a level that I'm going to be looking for in with Binance, because that would coincide right with our nice little line up there, which is intersecting our channel. So hopefully that will play out. We continue this upward move and hit the 478 level, full $100 possible in this. So I'm gonna write that down to 478, looking to be the last place of a little bit of support. That level might play resistance, or we might blast through it. So definitely worth keeping an eye on. Let's go ahead now and swing over to Cardano. And for anyone that hasn't already, please do go ahead and maybe like this video if you like it. Feel free to leave a comment. And also, if you have not subscribed, please do subscribe. It really does help me out a bit. I totally appreciate it. All right, flipping to Cardano, symbol ADA, Alpha Delta Alpha. Alpha Delta Alpha. Tried to say that a little bit too quickly. You can see, just really quickly, I'm going to compare Binance, just so you can see what I was talking about as far as having these kind of sit on top of one another, you end up with some interesting, you know, very similar movements. Binance has been more volatile, so they had different timings on their rise. But look at that fall that they had back in May and kind of what's happened since then. So, all right, let's look at Cardano. We're going to throw on some moving averages once again. And I like to keep it simple. You know, some people will have like, oh, I use the 12A, the 21, these simple moving averages, and it's, you know, that's the key to my trading. That's fantastic. I have, you know, the difference with the 20 with the simple versus the exponential moving average. The main thing is that, or the only thing is that the exponentially weighted moving average puts more weight on recent pricing rather than historical, and or I shouldn't even say it that way. What really happens with simple moving averages is that all the prices are used on their own. They have their own. There's no weighting applied. So yesterday's price and the day before are equally valued in the calculation, rather than having the more recent one more heavily weighted. All right, so in this one, actually, this is on the daily level, we have a scenario where it's actually a bullish pattern, because the 10-day, the 20-day, and the 60-day are all in line with the near-term moving averages higher than the longer term, which is an indication that prices have been going higher. Let's take this down to the 1 hour. So on the 1 hour, notion, you have a little bit of convergence, because you can see it numerically. The 20 is higher than the 10, and both of those are higher than the 60. So that's more inconclusive when it comes to the way to using this, at least as a trading signal. All right, let's go down to the 30-minute level. So, yep, more convergence. Once again, I'll pull this down so you can see it numerically as well. When it comes to the moving averages, right now the 60 is between the 20 and the 10 day. Because the 60 period is still higher. It's higher than the 20 period, and the 10 is lower. So it's right in the middle. So definitely some convergence. Convergence is just a sign that the direction of the trend may be changing. And then at the 15-minute level, you have the 10-day, or the 10 period is higher than the 20 and higher than but below the 60. So again, the 15 and the 30-minute are experiencing more convergence. Let's take a look. Just remember, the 1 hour actually had convergence too, which could be going higher if this 10 pulls higher again. So it was only the 1 day that gave a more clear bullish signal with regards to the moving averages being all in line. Let's get rid of these moving averages. Take a look at some MACD. So here's the MACD. All right, man, lots of movement here, and look how few times, and this is the daily, look how few times the MACD has actually pulled down to the 0 level. I mean, that's pretty bullish overall, and it's just oscillating back and forth in positive territory, which means that I'm not getting a clear signal from the MACD to sell Cardano. All right, let's take it down to a lower time frame, the 1 hour, where you do get quite a bit more movement, oscillation. So, you know, back on the 5th, we had a bullish, crossed over the 0 line. You would have caught a little bit of bullish behavior, gave a sell signal on June the 7th, pushed it back negative almost immediately. That's a pretty strong little move there. So you could have caught, even if you had waited, you could have caught a piece of that. But at these lower time frames, it really moves quite a bit more violently or volatile. I shouldn't say violent, just volatile. Next up, let's see. Here we go. You have this crossover on June the 8th, and it did yesterday cross into positive territory. This definitely looks more like a bullish trend starting. And this crossover here, I would be this bearish crossover. I would be more inclined to believe in it if it were not. I can see the MACD, the blue line, already curving higher rather than going below the zero line, which makes me lean or believe it probably is heading higher rather than going back. So we had a couple of significant bullish crossovers in the last few days on the 30-minute, and it did cross the zero line. I don't like it when the MACD and the signal line are hovering close to the zero line. But I do tend to use that or look at that as just continuation of the previous trend rather than a reversal. Normally we look at these crossovers for reversals, but the reversal really hasn't come in strong. It's still kind of being affected by this bullish crossover that happened back on June the 8th. And we'll just take a look at the 15-minute, which makes it a lot harder to see price volatility. You can do it that way. There we go. And on the 15-minute, we had this bullish crossover finally happened back on June the 8th. And this has really just sort of been, this would have been a significant bearish crossover that happened on June the 9th, but it never did cross the zero line and has just stayed back positive. We did have another bearish crossover later in the day. It was last night on June the 9th, and it crossed the zero line. So you could have played that rather tightly. Right now we're sitting on a most recently, about an hour and a half ago, we got a bullish crossover, but they haven't crossed the zero line yet. But one more green bar, one or two more green bars, and I'm sure that'll happen. But it really is hard to trade the MACD on these shorter time frames because it oscillates so much. And in waiting, just using my own rules, waiting for the signal to cross the zero line, you actually can end up, missing most of the moves. I want that crossover to happen quickly, not to take several time periods waiting for trade confirmation. All right, let's go back to the daily and just take a look at some levels here. And I do love using, a little Fibonacci retracement because it puts things into a bit of perspective, at least for me. So I'm going to take this really we'll take this move back from November, stretch that across. Look how significant that 38.2% level has been. Arguably, there is resistance for that top high bar that hit in April. And what I'm saying is 38.2 is $1.57. Then you see this play support in early May. Ended up playing a little bit of support one day here, one day also on June the 1st, sort of was the launching point. And we're sitting, price action sitting right on top of that right now. We'll see if it's going to build from there. So you have to remember that $1.57 in Cardano might actually, and that's the 38% retracement level, 38.2%. Just writing that down from my notes too. Seems to be a level of interest, and certainly can create a nice upward trend. What's interesting about Cardano is that it still seems, take out a few You have to take out a few extremes like price here, price here. This thing seems to be marching higher, right? Which I would expect. I mean, Cardano, the Cardano blockchain, some people are expecting this to be to play a significant role in the future of crypto. So, I like that. I'm looking right now at blockchain coins, like they are. I mean, just infrastructure. This is what the future will be built on. And from that standpoint, I've always been a fan of infrastructure investments, even in the when you start talking about companies and stocks. So yeah, this is really interesting, and yeah, how about that? If you're looking for hope, don't trade hope. But if you're looking for hope, that nice little upward trend is worth some hope. And the fact also that it's sitting on top of a Fibonacci level right now is really kind of strong. Let's do this too. We'll give it a nice little show some love. Where are we? Where do I want to do this? I mean, I'm going to have to lower this. So I'll just draw it and then drop it down to where I want. Pull it down rather. Right in this area. I was kind of curious. That's resistance that we saw here back in May. We saw it briefly at the end of May, but really it doesn't look relevant as much in June because we've had two bars right through it. It really didn't stop there. And if I were to go to the top of those bars, it only then pulls in the tops of the candles, a couple of the candlesticks. So that's probably less relevant. I do like this upward trend though. Definitely worth noting for Cardano. And the fact that it's hanging out solidly on top of its Fibonacci retracement, which, I'll hope for a positive move just to support that. That'll confirm, rather, the significance of that level. All right, here we go. We're last up. Thank you guys for hanging with me on this video. I know it's a longer one. We're going to take a look at DOGE, which has become the layman's, man, people love this coin. I'm going to just look at some moving averages. Man, I mean, just looking at this is, whew, yeah. Let's just look at the moving averages and go from there. So flip it around to the 10. And obviously, I'm sure several of you own this. I do own some of I own some of each of these, actually. Nothing significant, but just a little bit to be able to have the conversation at the cocktail party, right? Isn't that what it comes down to sometimes? Like you have enough to be able to talk about it with your friends, to share in the lamenting or the victories, but it's not so much that it's going to really affect my financial future just yet. I wish I had some back here in April, because that would have been a very nice. I mean, this coin popped and it's come off, but look at the upward trend on that 60-day, right? So this tells me we're still gonna have some. We'll have some fun analyzing this. All right, so right now you gotta say this is the daily chart. You have a situation where the once again they're out of order. You've got the 10 period the 10 day is between the 60 and the 20, actually closer to the 60. So we'll see if this does end up pulling up and turning bullish. Let's take a look at the 1 hour level. Spread that out a little bit more so you guys can see. So at the 1 hour level, and I'm actually using the numerical values. You have a scenario where once again, you've got the 20 period is higher than the 10 period, and both are higher than the 60. So the 10 is between the 60 and the 20. So that's more of an inconclusive period as well. They're not in order. Let's see. Same thing happening on this scenario. You've got the 20 on top, the 10 in between, and then the 60 down below. So inconclusive once again, the 30-minute level, and down to the 15-minute. Also inconclusive. Which ultimately, because you've got the 10 between the 60 and the 20, but with the 10 being above the 20, it's a good chance that the moving average is becoming more bullish, and it's just going to take a few more bars before the 60, before both the 20 and the 10 are higher than the 60. So let's kick back out to the daily. We're going to look at the MACD just to see what momentum is happening here. And I can already, man, momentum in this thing has to be super crazy just from the price oscillations. So on the daily, you just have this one bearish, and you've actually had a bullish crossover within the last few days. It's just that it's not enough for it to pull up above the zero line. So it's kind of flatlining, which, you know, it's tough to use that as a trading signal. Let's look at the 1 hour. So in the 1 hour, we did have a bullish crossover. We have one. Move this over a little bit. We had one over here on June the 8th at 5 in the morning. We had another one June the 8th an hour later, or a little bit later, and then we have one again a little bit later in the day on June the 21st. I'm sorry, June the 8th at 9 p.m. Man, I'm all over the place. June the 8th at noon. So that is significant because it did end up crossing the zero line. But if you waited for that confirmation over that many bars, you already missed the move, which is unfortunate. And it actually is at a period where it's giving a bearish crossover right now, but kind of flatlining, meaning it's not headed straight lower, it's flattening out. So that might, and that to me leads me to believe that it's still continuing this bullish move higher. Let's go with the 30-minute. So 30-minute has had a number of crossovers, some bullish ones back on the 8th as well, and it crossed over the zero line, but immediately crossed back and has stayed near the zero line, which to me once again is a continuation of the previous trend. We did have a bearish crossover yesterday evening on June the 9th, and that did end up, it went down some. So let's see. So from, I'm just looking at the high of 34.48 cents all the way down to this low of 32.85. So you're just shy of 2 cents, 2.5 cents, well, 1.5 cents to 2 cents. You know, that's the move that it took over these hours. And it's higher since then, but I'm looking at the MACD and just saying I wouldn't use the MACD at this 30-minute level and not this 15-minute level either. Look at this bearish crossover, bullish crossover, and price really hasn't done that much. So it's moving around. The MACD is moving around quite a bit without seeing equal price volatility in the stock chart. So let's go ahead and pull out the Fibonacci on this one too. Get a better sense. We'll just go from beginning of April to present. Pull that on over. So clearly the 61.8% level, this price range to 31.5 cents or 31.6 cents has been significant, because we've seen it play as a bit of support over the last month. So I'm going to write that down. Even though we're not largely higher than that right now, it's definitely worth remembering. That's that 61.8% level of 31.6 cents in Dogecoin. And, what I don't see is the same level of upward trend that we had in the previous, in like Cardano, a little bit in Binance too. This seems to be more of a sideways channel. And, yeah, we'll see how this ends up going. Let's get rid of this and just do a nice little channel. I love these channels because a channel can give you an idea of where you're heading next. Let me see if I can get that. Price did I don't mind getting rid of extremes, or ignoring extremes in my channels. The reason I do that is I'd rather say, okay, I think the upper portion of this current channel, right, the upper limit might actually be this 37-cent range. And actually, I'm gonna, yeah, I think that's about right. I was going to angle the channel higher, angle it up to catch the bottom of these, but they're not really in line with what happened over here at the end of May and end of May. So this channel, let's see, you can do that there. So maybe Dogecoin just sort of flatlines in this range for a little bit. This channel has a lower limit of 30.2 cents and an upper limit of 38.3 cents. So an 8-cent range. It could be, it could sit there. Obviously, we could blow through that today. This coin definitely, especially given the volume that's possible. This is one of those that can pop. And we've seen explosions happen before, like we did in April and in early May. But that being said, it's lost a lot of its steam, a lot of its relevance even after a few tweets and whatnot. But there are plenty of people that still have faith in Doge. So this was one of those for me where I want to own enough of it to be able to participate in any moves higher, but it's not it's not a significant portion of my crypto holdings. The most significant for me is Ethereum, and it's totally an infrastructure play. So thank you guys for watching this. I know it's a much longer video, but I wanted to hit those 3 coins. These are, I've gotten some comments on these as well. I wanted to go ahead and get this analysis out of my head too, just to ask myself. I'm constantly asking myself, like, hey man, are you sure that you've done the right thing with your capital? Because this here, that's pretty nasty, right? That's pretty nasty. So I always want to give a new analysis and make sure that what I thought about an investment yesterday still holds true today. And so we'll see. We'll see what's going to happen with these, right? This is kind of a interesting little interesting. But yeah, always fun to see what you see on these charts and where we are now, going higher, coming back off. Let me know in the comments if you guys have any thoughts on Binance, Cardano, or Doge. And also, if there are any videos you want me to knock out next, definitely let me know in the comments. Don't forget to subscribe to the channel. Thank you guys for watching, and have a great day. Happy trading.